Uh,
Hello, everyone. I'm so excited to have you back for our second installment of the Loan Lifelines webinar mini series. My name is Kayla Padel. I am our Senior Vice President of Marketing here at NewFi, and I'm so glad you've joined us. We're going to walk through one of these sessions, part of our series where we're talking about real loan scenarios. We're talking about guidelines and really ways that NewFi can help you close more loans and get them across the finish line with some unique ways that we only have here. So each of these sessions are recorded. If you've missed the one last week or you're going to miss one upcoming, we got some summer vacation, hopefully, for you guys out there. They will all be posted on our YouTube channel for you to go back and listen to. And we'll keep this quick. It will only be 15 minutes today. You'll be walking away with some practical deal rescuing solutions that you can use in your own business. So if you have any questions throughout the presentation, please put them in the Q&A in the Zoom. It's not the chat, it's called the Q&A, and we'd love to answer those at the end of our call. So, awesome. Today I'm joined by Justin. Justin is going to talk to us a little bit about a recent bank statement purchase where the loan, it really looked stuck because of the DTI, but he found a way around it. So thank you so much for being here, Justin.
hey, Kayla, thanks for having me. I'm super excited to be here. Appreciate you. Yeah, appreciate doing this.
Of course. Well, tell me a little bit about this loan. Um, Give me the rundown.
Yeah. So bottom line, it was a self-employed borrower. So we're going to go 12-month bank statement construction worker. Been in the business for about 3 years. Did the calculations. Our DTI was a little off. So we did the calculations. We got them all in. Bottom line is we can go up to 50% DTI, and we were over that. So
Hmm.
I called the LO 24 hours later. Once we got the income, told the LO about it. She plugged it into her system, and we're at 53. So I go, look, all we need is a CPA letter. CPA has to have done the borrower's taxes, has to have knowledge of them. Just let us know if we can go below that 50% default on the expense ratio, and we should be good to go. We're not that far off. She goes, okay, perfect. So, a couple days, or I'd say 24, 36 hours go by, and I get an email. So I call her. I said, hey, what's going on? She goes, borrower doesn't want the CPA to do the letter because there's a cost to it. I said, okay. I said,
Gotcha.
I said, what's the cost? And I said, well, I've got another option. I said, do me a favor. I said, find out if the borrower has any assets.
Yeah.
So, it was a quick, 15-minute call, just kind of talking about it, trying to figure out solutions. Yes, we're worried up front, but I mean, as we try to figure out solutions when it's all said and done. Um,
So they first had, let's break that down a little bit. They first had the default 50% expense factor, and that's what's automatically applied. How many times do you feel like that's normally are good to go in your experience, Justin?
that's a great question. Half, maybe a little bit
Yep.
more. A lot of the time, that CPA is needed. The CPA letter is needed. And when that happens, usually it's not a big deal, and we
Hmm.
rock and roll. In this case, of course, the borrower didn't want to pay the extra money that the CPA wanted to charge him. Not all CPAs do, but I think most of them do, but didn't want to pay that extra money. So, yeah,
Gotcha.
my question was, do we have assets?
Well, there's the million-dollar question. And what do people think of when they think of assets? I mean, this one was a little bit outside of the box. So tell me about how your LO responded to that.
Yeah, no, and that's another great question. So, bottom line is, assets. People are thinking stocks, bonds, mutual funds, right? 401k, or an IRA account. Um, in this particular, they didn't have an IRA account. Stocks and bonds, they didn't really have much. Again, someone younger, in the late 30s,
Hmm.
early 40s, and kind of again 3 years in that construction business, was in construction prior to and was a W2 borrower.
Wow,
So
okay.
she called me up and she said, he's got an old 401k. And I said, oh wow. I said, then the borrower, of course, does not work for that employer anymore. And she said, yeah. So with us, we look at that as we call it like IRA income, IRA funds, right?
Hmm.
When it comes to that, we don't need any distribution history. So we're not requiring the borrower to be taking any of that money. And we don't necessarily need an age, an age limit. Now, depending on the age, we take 90% of our 100 or 100% of that. But since it was an old 401k, we treat it as an IRA account. So I said, perfect. I said, do me a favor. I said, I need the last quarterly statement or last 3 month statement. So she ended up getting that. It was about 50,000. Borrower was under the age of 59 and a half. So we took 90% of that, right? And Kayla, the reason why we do 90% is just in case there's any early withdrawal penalties, right? And just kind of help the borrower out there. But borrower had 50,000. I don't want to say only 50,000. 50,000's, a good chunk of money. But the borrower had 50,000. The yellow goes, so the borrower only has 50,000. I go, okay, that's fine. I said, do me a favor. Let's take 90% of that, which the calculation's right here, about
Hmm.
45,000. We divided by 36. And that number came up to 1,250, so $1,250. And she goes, what do we do with this? And I go, we go into the income part of the 1003. We add that as secondary income. And now our DTI is going to be below 45 and we're good to go. So she
So
goes,
we're
it,
stacking it. We're
yeah,
stacking with the bank statement income, with the old 401k. Just yes, not just 50,000, but just having that put you with an additional $1,200 of income. I mean, that's huge because of the division by 36 months. So that's a
absolutely. No, absolutely. And most people will take that and kind of port it. And I didn't mean to interrupt you, Kayla. I apologize.
no,
But
go
they look
ahead.
at that and they look at it as an asset depletion. So depending on which lender you're using, you're dividing by 84 or 60. And
Hmm.
you're taking probably 70% of that because they are less than 59 and a half. Again, we're taking 90%, dividing it by 36. So it's just an added bonus that we do over here at NewFi.
Amazing. So let's talk a little bit more about that. So do they actually need to be taking a distribution from that old 401k account for this to count towards their
Yeah,
income?
no, not at all. I mean, all we need is just a statement, like either a quarterly statement, or I always just say, Give me the last 3 months. If we need them, we'll throw them in there. But yeah, no, we need that balance. They're not going to be hit with any early payment withdrawal because they're not withdrawing anything, but we're going to
Hmm.
go ahead and just use a percentage of that. And it's I say that many times. It's that simple, Kayla, and LOs are
I
like,
love
all right,
it.
what's the catch? And it's like there is no catch, y'all. It's pretty simple.
It's just that good. It's like magic. So we do have some questions about that in our chat here. Thank you so much for sending in some questions. Are 401k assets only when it's with a prior employer to use for this, or are the current employer 401k usable?
So we can do both, but if you want to take the percentage and divide it by 36, it has to be an old employer. If we are using that 401k and they're currently working with that employer, it's going to be part of that asset depletion
Mhm.
calculation, a certain percentage of it, and then dividing it by 60.
Awesome. And what is the maximum LTV you can go up to when you are using the old 401k as well as bank statements?
Yeah, no, I mean it all depends on FICO. So here at NewFi, FICO is the key when it comes to LTV. We can go up to 90% with a 720 FICO. If it's 700, we're at 85, 680 or I'm sorry, 660 and up, we're at 80%. So it really just depends on the FICO, but there's no limitations when we're stacking income this way, unless we're using P&L, but P&L is not what we're talking about today. There's no limitations on LTV.
Amazing. When you were talking about a CPA letter, getting that, what does the CPA letter really need to say on it if we were to go that route instead of the old 401k route?
Yeah, no. So bottom line is we want to know that the CPA has done the most recent tax returns or taxes for the borrower, right? We want to know about the CPA. Um, Ideally, if the CPA can mention that they are, 100%, 70%, whatever percentage of ownership that they are in the business. That's really it. Yeah, there's some other little things that we can and I can take a snippet of that, send it to you. Your AE can definitely take a
Mhm.
snippet and send it to you. But that's really all we need, and just cooperation with the CPA.
Wonderful. And what type of transaction was this? Was it a purchase, cash out, refi? Where did we
Yeah,
go?
Yeah, this was a purchase. The
Okay.
main source of income was bank statement, and then we used the secondary income using the old 401k, or we can call it just the IRA account.
Awesome. Great. All right. So yeah, let's talk a little bit about how it works. Take them through, let's say they do have an IRA or an old 401k.
Hmm.
What exactly do they need to get, let's go one, two, three.
Yeah, absolutely. So bottom line is we want the statements, right? We want to cover 3 months. So an IRA, 401k, depending on the company that it's going through, you're going to get quarterly statements or you're going to get monthly statements, right? Um, Ideally, we want to cover 3 months. So if we give us one quarterly statement or the most recent three, and we're good to go. If it's an old 401k, have them look through. A lot of the time, they can go through the email, they can call up the company, and they can get those. So don't be if they haven't seen that 401k account, if they haven't gotten any statements or anything. And this guy, it's been 3 years. He just contacted the company that he had it with because he found an old statement, an old email, and they
Mhm.
they gave him the most updated ones. So it was more than what he had 3 years ago, right? Because everything was growing a little bit, so it was good.
Love it.
So we went that way. Verifying it's a qualifying account. Yeah, I mean it's theirs. Is their name on it? You know, we're
It's
we're
important.
we're good to go. Yeah, it's got to have their name. It's got to match the ID. It's got to match the borrower's name. When it comes to age, I say there's no age requirements because just default to 90%. But if they're over that 49 and a half, we can take 100% of that. So if that extra 10% helps, perfect. That just gives us more income to use. We're going to take, again, 90% of 100% of that, and divide it by 36. I mean, I've said it how many times already, Kayla? I feel like I've said it 100 times. It is that simple. I can't
Yes.
I, I can't explain it any easier than that.
Well, that's what we love.
I truly don't
Um,
think we need 15 minutes to say that it's you take 90% and divide it by 36.
it's that simple. Well, tell me a little bit about pricing. We have some questions in the chat. Is there any pricing difference when you have to add on this income or anything exception
Yeah,
hit? We have some questions around.
yeah, no, great question. So, because this was the majority of the income is a bank statement loan, right? So we're going to go off bank statement pricing, okay, which is not far off of our full dog pricing. It's the same as our 1099. I mean, our pricing doesn't really change very much when it comes to that. Um, I'm sorry, what was it? I
Yeah,
lost
it's
train of thought
no
there.
exception pricing on top
Yeah,
of it.
no exceptions needed.
No
This is part
additional
of our
cost to add this
correct.
on,
Correct.
just full benefit to the borrower.
Yep, there's no exception needed. This is not an exception-based product at all. This is part of the products that we offer. If you have a borrower that's got $5 million in an IRA account, we can just qualify with that alone, and we treat that as a full doc loan. So we go, 1 year full doc, and we're good to go. So the pricing
That's
is
awesome.
not going to be any different than damn near a full doc loan when it's all said and done.
And we also had a question, was this purchase for an investment property or a primary residence? And
It
can you
was
do
a
it on both?
Yeah, no, it was a primary, but yes, you could do it off both. Again, every product we have here, you can go primary, second home, and investment property. Of course, if it's an investment property, it's going to adjust the LTV adjust, right, when it's all said and done, depending on our FICO score. But we can use it for all three types of properties.
Awesome. So, for a loan officer, what do you want them to take away when they're talking to their borrowers? What type of questions should they be asking to uncover if they have these types of accounts, and kind of get that full picture to see if that loan is savable before just saying, oh, we can't do this?
Yeah, no, great. I mean, you want to find out. So we've got a lot of options over here at NewFi. We've got our non-QM, our self-employed stuff. We've got our jumbo for your W-2, and we do fixed seconds for W-2. And I'm not trying to do the whole spiel here, but depending on what type of borrower you're talking to, if it's a full doc loan, if they want to go, if they're W-2 borrower, perfect. Find out if they have assets. It's real simple. Just okay, perfect. This is what we're going to do. But if our DTI is off a little bit, we stack income here. So find out if they've got some assets. Find out what type of assets they are. Mutual funds, savings accounts, checking accounts, an IRA, an old 401k, a current 401k. Just ask those questions. Find out where that income is. So I've been doing this 4 years, and then I'll be quiet here. But I kind of wrap my head around non-QM as I was an LO for a quick minute, understood the 1003, tax returns. What was that line one, right? If it wasn't
Mhm.
where you needed to be, you knew you were kind of SOL. But if you, for non-QM, when it comes to the income part of that 1003, we just have different ways. We have different solutions, different ways to prove income. And that's all we're trying to do here. Um, New us AEs, we're going to take a couple extra minutes up front and kind of talk to you about your borrower. And if we ask a question you don't know it, just go back to your borrower and ask it and then come back and let's put a good, 15, 20 minutes. If it's a 2-day conversation, let's get this structured correctly. So when it is registered, when it's introduced to the underwriter, that picture is there and we know how to move forward with it.
Absolutely. I love that. And we have some more questions, which is amazing. Is this only for business owners?
So a bank statement product, yes, this is only for business owners. But when you're talking about an IRA account or an old 401k, no. Usually an old 401k is going to be a W-2 borrower. And if a borrower owns their own business, they could be taking monthly deposits and dumping it into an IRA account or depositing it into an IRA account. So they could have an IRA account. But when you're talking about bank statement income, yes, that is for folks that have a percentage of ownership in the company that is paying them.
But this can be stacked onto full doc income. This can be stacked
Absolutely.
onto
Absolutely.
1099 income. Yep, we do it
Absolutely.
all.
This is, yes, we can stack 1099 with IRA. We can stack 1099. If you have two borrowers, we can go maybe one borrower's W-2 and the other one's own a business for a couple years, or the other one's a gig worker in 1099. We'll stack them all day long. And not just two, but we can stack multiple. So if you have two borrowers on there, one W-2, one's 1099, and that W-2 has an IRA account or an old 401k and we need to use it, we can use it.
No, that's an amazing point. We're going to stack them up like pancakes right over
That's
here and get
that's
them
right.
done.
A little syrup and rock and roll.
Exactly. Well, that's a very sweet note to end on. Thank you guys for joining us. If we didn't get your question answered, or if you have another question, send it in to us right now. This will be on our YouTube channel, and we will be here every single Thursday throughout the summer at 1 p.m. to 1:15 to talk about a new way that you can solve deals and get them across the finish line. So thank you so much, Justin, for joining us. I really appreciate your time.
Well, Kayla, thanks for having me. And again, thank you so much.
Have a great day.
All righty.